Alright, what up, YouTube? I'm back again and I got another trade recap video for you. It's been feeling like this doing these trade recap videos is like homework, so I've been slacking a little bit. Just more or less, instead of making individual trade review videos, I'm just gonna do the videos as they come. Like I got two trade recaps for you for the trading week that started on Sunday, August the 3rd, and then Friday, August the 8th. So stay tuned. So we're gonna start off with the trading day, Tuesday, August the 5th. So Tuesday, August the 5th. I didn't trade Monday because basically like there was nothing setting up for me. There was no setup for me on the dollar. Everything's starting off on a dollar time frame. I mean, everything's starting off with the dollar index for me. So basically, what I do is I follow market structure on the dollar, and on Monday there was no. If you see right here, this is Monday, August the 4th. There was just a big consolidation. We didn't do anything, so that was enough for me to be like, I'm not trading. So on Tuesday, I marked out these prices right here. Let me put the line up there. Damn, I stopped. These are my new prices. That's why they're locked up there. So these were my prices right here. I'm pretty sure of that. These were the lowest prices on the dollar right here. These prices up here were the highest prices, and this is from Monday, on Monday's trading. And well, these were the lowest prices actually, but more or less, I was looking for the market to, even though we traded below the lowest prices, that was on the new opening day. Like the new trading day opened up and we gapped down, and then we wicked below those prices and then traded up. So immediately that was like a disqualification. I was like, nah, that's not what I'm looking for. So once we started to trade up above these prices at, let me see, it's at 3 a.m. At This is the hour time frame on the dollar on Tuesday. So at 3 a.m. on Tuesday, I'm gonna show you where my first trade started out. It started out from that candle right there, that candle at 3 a.m. If we go over here to the ES contract on Tuesday, drop down to the 15-minute time frame. We're gonna go to Tuesday, August the 5th at 3 a.m. So before we get into that, I'm gonna zoom all the way out for you. It's the hourly time frame, all the way out so you can see it. So if you look from right here, Thursday the 31st, July the 31st, until these prices down here, this whole thing right here is a price swing with different pools of liquidity. These swing highs right here, these are all different pools, intraday pools of liquidity. So on Tuesday the 5th, right? This is what Monday did. Monday I didn't trade. There was nothing for me to trade. I didn't like it. On Tuesday, this is Monday right here. Tuesday, this is Tuesday's trading right here, right? I'm gonna zoom into it real quick. At 3 a.m. on Tuesday, that was when I was basically expecting to see a pool of liquidity get purged, which at this is still the end. This is like the end of Monday. This is like like 10 o'clock, something like that. 10 o'clock. This is the midnight candle right here. That candle. This is the midnight candle. I didn't really care too much about anything before those prices. So I basically was using a breaker that took out these prices right here. And where's the breaker at? The breaker And I was on the hourly time frame at that. So let me zoom on, go to the hourly real quick. This video is gonna be longer than I want it to be for sure. I'm gonna do better videos. I just ain't really been into it that much. I ain't gonna lie to you. So Tuesday on the 5th, right? This whole trading day right here is Tuesday the 5th. I was looking for the pool of liquidity right here to get purged. So we did purge those prices, but once again, I wasn't looking for nothing to happen until 3 o'clock when the dollar started making higher prices, which is go back right here. These prices right here, once this 3 o'clock candle right here traded above those prices, to me that signified just more or less just a change in market structure. Right, so higher prices mean lower prices on the higher prices on the dollar index mean lower prices on the futures. So at 3 o'clock, when we're making higher prices on the dollar, this is where I was basically like, all right, this is the breaker right here. This is the breaker candle. I use this candle right here. That's the candle I use to I put a stop limit. Put a stop limit. I put a stop market order at the closing price of that candle, which is 63.65.25. And yeah, after prices traded through those prices right here, you see, this is like I went in a real deep drawdown. Not gonna lie, I went in a real deep drawdown. But this happened. This is the price action that ended up happening. So that was my first trade. And then I was on Tuesday. Wednesday I didn't trade. No, actually I did trade Wednesday and I took a loss. Damn. I don't feel like going over that shit. Wednesday I took a loss. I came out break. I took one loss. I took a loss on one of these prices somewhere in here, and then I got back in at a different price, and instead of taking a full loss, I took a break even loss. But I had the correct directional bias. Like I was trying to buy the market, but I just didn't get in at the right prices, and I got stopped out inside of here somewhere. And then you see the move that ended up happening, but I was fine with that. So Thursday, I'm gonna show you what I did on Thursday. So Thursday, we're gonna go to the dollar quick. So this is Thursday right here, right? So the prices that I was looking for that I wanted to trade was these prices right here. Because, if you zoom out, it was on the downtrend. It was on the downtrend. Let me get rid of all this stuff so you can see. It was on the downtrend. All of this is a downtrend. So this was the new trading day. This opened up at what, 5, 6 o'clock? 6 o'clock. This was the new trading day. So I automatically was looking for lower prices after we trade below these prices. So we traded below those prices kind of fast. And actually, I wasn't trying to, I wanted to, these weren't the prices I was paying attention to. After the prices continued to sell off, right? Lower prices. When prices traded above these prices right here, the swing high that got created. Prices traded above this swing high this swing high right here. Because mind you, we're looking at this price leg right here. This price leg is low, lower high, lower low, lower high, lower low. The moment we broke these prices right here, which happened at 7 a.m., you see we traded above those prices. Stop. Oh, let's turn these on. This line, show you right here. These are my new prices, so that's why they up there. Well, that's why they locked onto the chart. These are my new prices. So get rid of that quick. That one quick. just to show you. So right here on Wednesday, right? These were the prices I was looking for the market to trade above. So once the market traded above those prices at 7 a.m. on Thursday, 7 a.m. on Thursday, I was looking for lower prices on the indexes. So this is Thursday, 7 a.m. This is what was happening at 7 a.m. At 7 a.m., we just started to make a swing high. So this price action right up here, swing high, basically the market just barely started to turn around. So higher prices on the dollar means lower prices on the indexes. When the market started to turn around, I was looking at these prices right here, this red candle right here, Thursday, August the 7th, 2 o'clock. That candle was my breaker candle. That was my breaker candle, right? So I put a stop order. I put a stop order right at the close of that candle. And this is the price action that happened afterward. You traded right through there. That was the goal. And we got paid. And yeah, that was it. So why was this a breaker candle to me? Because this is a breaker block to me because it was trading into this fair value gap. You see this fair value gap right here? Right? Stretch it out so you can see it better. I got my cursor on the actual fair value gap candle, the candle that had the fair value gap inside of it. So this was the gap. This candle was the candle where smart money was offered a chance to buy at a discount to get into this fair value gap. So before you see these three candles that went up for 3 hours straight, it's the hourly chart. This candle right here was the candle that was basically the last chance for smart money to get in at a discounted price to buy the market into that fair value gap. So afterwards, when the market delivered prices as far as they wanted to go into that fair value gap, when the market decided to turn around, right? All the guys that were net long, their positions go underwater once we get to these prices right here. And those prices are the prices where basically the smart money went long at. So when the market was done delivering into those inefficient prices, right? By the time the market turned around, this is when the guys that didn't get out of their positions, that's when they got offered a chance to basically mitigate whatever positions that they were in if they took a loss, But yeah, that's it, man. I'm starting to feel like homework doing this shit sometime, man. I got to get back in the groove. My personal account is positive right now and it's growing, but I'm just not really into it right now. I ain't gonna lie. But I definitely have some more videos for you next week. I'm just getting better at the craft. And yeah, that's it.